Okay, hello traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, September 19th. Glad to be back. Thank you all so much for your comments. Jaya, Peter, Degan says welcome back. Hope you're well. Mark, I appreciate your prayers for and thanks for continued recovery and health. I appreciate you guys so much. Ty, I've been getting your messages. It's been a very difficult 3 weeks, guys, and I just want to really I can't convey how much I appreciate all your commentary. It's very humbling. So markets are coiled up and ready to explode. We need your sharp master. Wonderful to see you. Great to be here. Pooja, thank you so much as well. Just for your information, guys, I'm not going to share this in the public sessions, but I did suffer from a traumatic brain injury, a fall that fractured my skull, and there's been some brain hemorrhaging. So kind of coming back a little bit earlier ahead of doctor's orders, but you can't keep a guy like me down too long. So if I'm a little off, it's going to take some time before I'm fully recovered. And it's a slow but arduous recovery. So bear with me. We'll keep it light here for the first week until I get back to the swing of things. But I hope to have updates for you and back in the webinars here on SB as soon as possible. So with that out of the way, no more drama. We're going to jump right into the markets. It's been very interesting to kind of take a look back. It's been for me almost 2.5, 3 weeks now since I've really done some deep analysis. But last night was interesting because there's a lot of things in play. Ideally, the recovery or the pullback, I should say, in the DXY that we were tracking since last month essentially has been in play. You got 1 week of reversal here early into the close of August, early September, but the pullback here is still looking lower. I do think on some of the setups, you have to look for a little bit more of a setback to get back involved in any dollar short exposure. But all things held constant, you have some very clean monthly opening ranges in place, both on the majors and in some of the commodities. So on the menu for today, we'll take a deeper look at DXY from last night, give you an update on sterling and dollar yen, both of which just look like they're at resistance, or at least dollar yen was stretching to resistance. That's still holding. Aussie has been an interesting setup. I like Jamie's idea on the swing trade last night. We'll take a look at the intraday picture there. And dollar Swiss, SNB is on tap tomorrow, so it's worth it. Take a little look on that pair, also coming off of some near-term support. Quick look at gold and crude. We'll wrap things up on my end. So if you have any other questions, guys, or trade setups you'd like to review, as always, please feel free to throw them on the message board. Ty says, Jamie upped his game in your absence. Hope he keeps it up. That's my man. That's why we're in business together. He's a good man. Can we have Euro, please? I'm in a short trade. Man, yeah, we'll take a look at Euro. If I had to be in a position right now, gun to my head, I would be short. But I'd be very cautious on that as just a near-term pullback. The weekly chart of Euro basically has us, coming off of near-term resistance as well. So I could see a little bit more of a pullback here, which is why I do favor kind of a little bit of a setback. Even if it's going to be a near-term consolidation, you still have some room. Ultimately, I do like this breaking higher, but we have to respect this at this point, I think, for a short here. So just my opinion, but we will take a look. DXY. So here's the weekly charts. Looks very clean. Before my injury heading into all of August, we were basically looking for the short play off of this reversal, off of both median line downtrend resistance and former upslope resistance. Really nice confluence there. You saw that we probed through it into the middle of August. Close basis, really, really clean hold and pull back. Okay, so just something to keep in mind there. Ty says you need in your leisure to put up monthlies on ATR, explosive point in time. It is. I completely agree with you. Even the seasonalities, Ty, are very interesting here. So might be a nice little tidbit to do. DXY weekly. Here's DXY daily. Okay, basic slope just off of this year's low. Okay, Was a really nice pivot here on the break, retest of support. We've been sitting on that ever since, kind of probed below, but what do you do here? The problem with this one for me is that I kind of want to see a little bit more of a recovery before this breaks. Ultimately, 94.20, 94.16, that's sort of the breakdown level. So I can't get, again, excited about selling dollar index into the monthly opening range lows, into support at these levels, right? Momentum still above 40. So it's very precarious here. Not surprised to see the kind of price action that we've been seeing over the last 2 weeks, just on account of what this thing has done. Every rebound, even this outside weekly reversal, okay, or this outside daily reversal, excuse me, on the 18th, on the 14th, off of support, that would be near-term recovery. We've obviously broken those lows. So what do you do here? Here's the intraday picture. It's not that clean, but this is what I was looking at last night. So what is this level here? Decent pivot in price dating back to October of 2017. Resistance, breach, support, break, acceleration, resistance, resistance. Nice, decent pivots here. Okay, the 618 extension of the decline gives you 94.16. Again, we just talked about 94.20 on the weekly chart and the daily charts. Weekly opening range here is really well defined and set since the Sunday open. So you have a really well defined range. The key levels for me are going to be that 94.16, 94.20 region, or if this thing breaks 94.96, last Friday's high, especially the upper parallel, that would be the onset of a larger recovery in DXY before we play lower. Ideal scenario, this breaches, comes into this region and fails somewhere in here, and then moves through that 94.20 target. But from here, it's difficult to favor getting short DXY at these levels. So in time, we've talked about the fact, or I recall, if my memory hasn't failed completely, last month we talked about the fact September seasonalities for DXY are typically pretty weak. They're typically pretty good for gold, typically pretty good for euro. So, we don't want to necessarily bail on that, but think we need to pick and choose our entries here. So I'm looking for a little bit more recovery near term to get back on the short side, 94.20, 94.16. This is the region that would give us the onset, I think, of the next leg lower here in DXY. Any questions? She's not the prettiest at this level, but I think broadly, game plan is pretty well defined here. All right, so who was in the euro trade? Eman, let's jump into euro since you're in that right now. I didn't have a setup on this, and I was looking at it for a while last night. Eman says me. Ty says, I have missed your analysis, a breath of fresh air. Cheers, mate. It's great to be back, man. So here's euro on the weekly chart, or on the daily chart. This is what I was showing you earlier. Here's the weekly. This is why I think if I had to be in the near-term position, I think I want to try to see this thing a little lower. There's a couple of things. Obviously, where this thing turned in the euro is very similar to where we turned in the DXY, no surprise. But certainly, even from a structural standpoint, really nice area of which to start that pivot higher. This is your first sort of line in the sand. This is the first hurdle that you want to pop above to validate, all right, more important low is in, and obviously the next leg higher. So, we probed through it for the last 4 weeks, 3 weeks here while I was gone, and we haven't been able to close through. I'm looking at this basic purple trend line, support, 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 break, acceleration, haven't been able to close above yet. Resistance, resistance, resistance. Add to that basic median line for the pitchfork, right? Nothing fancy. Breach saw acceleration, support, support. The final break that we saw here in July saw acceleration, resistance, resistance. So on a weekly standpoint, guys, what we need to see is a breach above this confluence region, call it 116.90, call it 117. That's the weekly close above that we would need to see to really validate, okay, look at the next leg higher. Initial target 1780 and 1916. Note that the 52-week moving average is right nestled in that region as well. So the levels are well defined, well discerned, but at this point, right here, we kind of just need to, wait for the pullback, in my opinion, to get back long. Man, if you're in this on the near term from these levels, yeah, from a scalping standpoint, myself, yeah, I'd be looking for exhaustion near term pullback. 117.20 to 50 firm rejects. Talk to me about that again. Ty, break that down for me. I'm not sure what you're meaning. 1720. So here's the weekly chart. Let me jump into the near term charts. This is the daily. Okay. I had 117.50. Lots of fibs there, you're saying. Okay, near 117.20. I'll take a look at that in a moment. Right here, what I've been looking at in this region on the weekly chart, or on the daily chart rather, excuse me, is 1750 and 1780. 1780 is just a 38.2, basic fib retracement off of the yearly range. So that's taking into account all of 2018 price action. 1750 is the high day close for July. Now that high day close saw these spike highs touch in July 17th, again on the 23rd, again here on the 31st before turning lower. We failed just above that last month on this rally, and those highs are just higher near 1730. So I'm thinking a little bit higher than 1720, Ty. Just looking at this objectively from a price action standpoint, is pretty big, but there is this whole area is littered. Again, one of the reasons, here's 1713, right, Ty? This is closer to your level as well. Basic swing low, pivot in price, kind of messy here, right? But on a closed basis was rock solid last month. What do? Right? You're now looking at like a 60 pip region of resistance here. Can't get excited about getting long here. Just not my cup of tea. Ideally, well, let me say this: bullish inval for the broader picture, unfortunately, still is all the way down at 1530. Okay, this is the break that would suggest, we have to look at resumption of the broader yearly downtrend. Near-term support, ideally, you don't get too much lower than this, but around 16. Okay, you have monthly open support at 1595. Okay, right here. Ideally, that would be where you'd want to see price hold on a pullback for the resumption. So that's the entry to me that would be that would entice me for the long position. Let's say that. Near term, I'm kind of with Puja. I think you get a little bit more of a pullback play. You want to be very nimble, right? Because we're playing against the trend. We still think that euro does go higher, but I do still think, in the immediate term, near term, you look for a little bit more of a pullback. The tops of rallies fail earlier and earlier in this range. Yeah, it seems to be the case, right? It seems to be the case. Also looking at momentum, right? This is a perfect 60 tag and hold. So the broader momentum profile, as we call it, from the start of the year hasn't invalidated the short bias yet, right? Remember, we always talk about in basic sort of terms, typically in really strong downtrends, momentum will find resistance at or ahead of 60, and you want to see multiple breaks below 40. In strong uptrends, you want to see support in momentum at 40 and multiple breaks above 60. So for us to look at the momentum profile and call a reversal in the momentum picture, I would want to see a daily close above 60 just as an indicator, right? Just as a tell that there is sort of a obvious shift in the momentum profile. Does that make sense? Please say that again. So Ty, typically, again, I'm not sure which part you needed clarity on. Typically, in strong uptrends, momentum will find support at 40, at or ahead of 40. Okay. Now these are not obviously nothing here is always the case, but just look at price action. Don't take my word for anything, as I always tell you guys. Look at price action in the 2017 advance, right? Every time momentum pulled back at or around 40, the momentum profile held. 60 break keeps it bullish. 40 hold on the pullback. 60 break keeps us bullish. 50 hold on the pullback. 70 break keeps us bullish, right? On the massive correction here late last year, you did tempt a break below 40 for a while, but still the picture remained pretty constructive, right? Since the start of the year and this break from oversold conditions, we broke 40 for the first time here in April. That was the onset of the triangle break that shifted the focus lower. We broke deep into oversold territory, still bearish. On the rally, here's momentum failing ahead of 60, still keeps the bearish picture in play, right? Now here we are at 60 and we're testing it as resistance. If we breach through this, it'd be the first 60 break from oversold conditions since back here, okay, in this move. When we first broke above 60, that was off of the lows. So even from a momentum profile, for us to get really bullish from just a momentum standpoint, I want to see a 60 break on a daily close basis. Ty, does that make sense? Little tell there in RSI. We've done tons of courses and classes on that. So there's much more stuff I can send you if you need more clarity on it. So just a tell there, right? So that's my problem with the euro on the daily chart. Think you could get a little bit more of a kickback. Support, ideally, 16, 15.95, monthly open, bullish inval, 15.30. Topside targets, you have to look at 17.50, 17.80, and this is the region, again, that if we do finally breach, in my mind, we'd put us back on course for the larger move higher, targeting 18.50, and that 119 level, a little bit higher. Any questions on euro? Here's the intraday picture. I don't really have a decent setup. I haven't updated this, just updated the weekly marker, guys. But you can see here's what we were looking at last, ahead of my life-changing experience. Here's what we were looking at with our bullish inval, basically at this region here, right? This was 100. If it was going to be corrective, that's what we want to see hold. It broke. You got a much deeper spill towards that 1530 level, which we just noted is our bullish inval now, because it's the monthly opening range lows. So objectively, if we break the monthly opening range lows, that shifts us lower. Can't fight it, right? Can't fight it. So, Eman, does that help? I'm not sure where you're short from, but let's take just a closer picture here for Eman. Update this chart for you. Just bear with me one moment. And look at this basic slope, guys. You can't make this stuff up. Look at this. This is the consolidation that we were talking about. This low off the June 21st decline, support, support, break, resistance, resistance. Even here, after we broke above it, you saw acceleration, support, call that what you may. Here we are again. Here we are again. Eman says, amazing setup. Since your last update on Friday, August 31st on Euro, your setup is working in market till today. It's not my setup, Eman. It's the market's levels. I'm just helping you find them. She says, I'm short from 116.95. Okay, decent entry there. So if I was in that position, these are just things I'd look at. Okay, Eman, let me just do some near-term setups here. 38.2 is probably, yeah, just basically a little bit lower. Way too early to talk about something like this, but just to take a look at it. Okay. No fruit there yet. Okay, so look, the 15 level, or the 50% level rather, comes right ahead of weekly open support, which is 116.23. So that's 115.25. Watch that near-term region. That's sort of the break that would give you the onset of the decline, or that would be, excuse me, that would be a near-term target with a break of this decline rather, or break of this slope. That would be the target I'd be looking for initially. Secondary target would be 116. This is where I favor ideally entry. Eman, for the long side if we do get down there. So levels you would want to be looking at first is this basic slope, which we just turned ahead of just now. So just watch that into the open. That would be sort of your first region, take some off. 1625, I'd be taking off 3/4 a trade, if not half. And then, this is where you'd be closing out all short exposure, ideally an entry area for our long position. Try to get back on the resumption trade there. So you could see a scenario where this thing goes to test the weekly opening range low, for example, spikes into this region, then moves higher. Don't know if we get it. But even from the momentum standpoint, you don't necessarily have divergence. Well, a little bit, right? This looks like a minor higher high from the Friday high, obviously a much lower high in momentum. But yeah, I do think, you look a little bit lower near term. Ultimately, 116 would be an area to look to buy. All right, hope that helps. That's number 2 is euro. Number 3, let's take a look back at sterling. It's funny that this is one of the first things I want to take a look at, but it's just because the region we were coming off of yesterday just kind of looked obvious to me. Here's what sterling looks like on the weekly chart. Oops. Here's what we looked like yesterday. So, the basic thing I was looking at was this median line of the decline. I kind of just want to see what the weekly close looks like, right? We could go all through this all we want near term. On the weekly close, we have to breach the median line for us to at least continue favoring the immediate upside in sterling. Momentum has a basic 2-point resistance trigger, also basically being tested here. So if you put a gun to my head and say short term, what do I do here? I wouldn't say get long, just because you're coming into an area of which you have some momentum resistance, basic trend line resistance, and we need to see a weekly close above this to continue validating the upside. So the immediate threat, in my humble opinion, again, was for a pullback. Here's the daily chart. You had a basic 100% extension, 2 equal legs up off the low, gives you 131.66. On that region is also the 100-day moving average. Add to that basic upslope support, okay, of the current slope off the lows. Boom, boom, boom. So you have basic upslope support or channel resistance, whatever you want to call it. You have the 100-day moving average. You have the 100% extension. Again, in my mind, there's an area to look for resistance. Now, intraday, you did see a spike higher. We did get some data out of the UK earlier today. And even though it was pretty good data, really unable to help the bulls get above this level. Just goes to show you guys that the data, it's not always based on what the data print, whether it's better or worse than expected, but also where the market is currently trading from, positioning standpoint. We've been rallying since the start of the month. It's awesome. One of the trades I sort of regret missing most during my injury time is the long sterling trade, because it's something we've been talking about for so long, and we were getting so much kickback against. I wrote a couple pieces even on daily effects, and people were getting, you should see my hate mail on that side. So because they want to see it lower. They love the Brexit game and all this nonsense, but it was an obvious, really, really nice failed recovery or failed break below that slope, pull higher. We found again support against that slope. This break of the 50 line, that 38.2 line, okay, of the slope, for me was what we were looking for. So obviously late into the end of the month, we pulled back from that region. Earlier this month, we broke through it. This is your first area of resistance. So again, similar to the euro trade, right, Eman? If we get a decent pullback here, I do ultimately think you want to get on the long side of the trade, but the immediate threat still for a pullback, in my humble opinion here for sterling. So again, daily chart, no change to any of those levels. From a daily standpoint, 30.27 is near-term support. That's the lows that we made from back here in October of last year. Okay, also a decent pivot in price. Last month's August swing high, or late August swing high. That's your first area of support. Here's what sterling looks like on the intraday. All right, so this is the 120. Here's the 240, just to give you some reference from where we were last night. We highlighted this region right here. 131.66 is what I wanted to see hold. Obviously, the data print in the UK, like I said, we got consumer price index came in stronger than expected, 2.4%. The year on year was more important, 2.7% versus 2.4% expected. Core came in at 2.1 versus 1.8 expected. So it's just a beat across the board. You even got some headlines from May, whether they're rejecting the negotiated Irish Brexit talks or whatever, whatever. It's noise. At the end of the day, the next level held, right? You got the push through. We were probing through that when I was writing this yesterday. Here's 32.13, right on the money. Nice clip there. Here's the pullback. Now testing August open, which is not a big pivot at this point, but you do want to watch it because it's the objective swing low and there's slope there. Okay, there's slope there. So same type of gig, right? I think on this one, the ideal entry, as it were, would be 30.27 again. If you got that spill, that's current median line for the upslope, former swing highs. Again, going all the way back to that October level of last year. Be a nice level for an entry, in my opinion, if we get down there. Divergence into the highs here as well. We noted that last night in the piece. Here's the momentum oscillator. Really just unable to make any new highs since the start of the week. As we push into fresh highs, fresh highs, fresh highs. Again, no new fresh highs here. So on a scalp, on a near term, I wouldn't recommend guys taking a short against a high from here. It's still too big of a stop. But if you're holding the short, watch for a break of this level. This should have been where you took off a little bit of the trade, stops at break even. Next downside target's 30.81. Again, if you get all the way this low, definitely bail on any short positions there, but this is where I'd be looking for entries again for the long. So we'll see for sterling if we can get anything. You do get retail sales data on tap tomorrow. Pretty much that's it from the UK as far as data is concerned, at least in the near-term front. If the dollar breaks lower, stocks could have a blow-off top. Yes, Ty. We'll take a look at SPX. Let me write that down. I do want to show you my chart in the SPX because it's disgusting. Literally, when I came back, I opened that chart and I looked at it. I didn't even have to touch anything. I didn't change anything at all. 3 weeks later, we're still trading between those levels. So Ty, I'll take a look at stocks in a moment. I don't want to use the dollar as sort of the barometer for the blow off or not. Stocks could break lower and the dollar could break lower. The same respect, I still think stocks could hold this near-term range, and the dollar could still rebound a little bit before breaking lower. So I wouldn't want to make a corollary too strong between those two, but we'll take a look at the SPX in a moment. Any questions here on sterling? We'll jump into dollar yen, and then we'll jump into all of your questions, guys. I appreciate your I appreciate your feedback and comments so much, guys. Thank you so much. Okay. Dollar yen, interesting level. The weekly chart doesn't turn me on so much here because the weekly chart still looks like there's more up room to go. The only thing I would highlight here is basically, so this is your yearly open, right? Right here at 112.65. But the big level that we traded against last month or earlier this year was 113.27. That was so huge, so huge. 618 retracement of 2017 decline, and 200 long week moving average. Okay, was the perfect tag there. We turned right ahead of it. That's still like sort of your big area of resistance. Now, I'm just showing you this so you get the bigger picture of what's going on here. The near-term outlook for me yesterday was bearish, as you guys know, and we're testing that resistance level now. So if we're gonna hold and pull back, dollar yen would need to hold this high right now. If we breach through, like I said, just wanted to show you that in the broader terms, there is still room, right, before you head into anything major as far as weekly resistance is concerned. So just keep that in mind with dollar yen. And the stuff that we talked about earlier today, here's 60, attempting to be broken on a weekly close standpoint. Ty, this is what you want to see close to validate the broader breakout. Okay, near term, here's what I was looking at, dollar yen. So on the daily chart, you have 112.43, you have 112.44, and 112.65. Lots there. 100% extension from the ascent off the lows that we made in August. 1, 2, 3. 786 retracement from the decline off the July highs. Okay, just higher is the 2018 open. Like I said, 112.65. So So if we're going to break higher, or if we're going to rebound or pull back, this would be the zone to look for. Okay, bottom line. Now, there's a couple things I didn't put on there as well that I just wanted to highlight as well. One of the other reasons that this region is important also is because of the high day reversal close. The high day close, it wasn't a reversal, but the high day close that we made for July was also right there at 112.46. So there's a lot here. Okay, it's just to put things lightly. There's a lot here. If we're going to get some sort of pullback off this region, this is where you'd want to find it. Objectively speaking, looking at this, looks like a pretty clean opening range break for the month. Here's your September open. You set a high. There's a 618 extension there. We test that high for another day. The breach that we made on the 13th, okay, on this reversal day closed above. The pullback yesterday found support there before rebounding. So objectively, your September opening range does call for a late month high. Okay, it's the 19th. Feels like I've been in a coma for 19 days because I hadn't seen any of this, but we could get some pullback here. Again, the immediate standpoint is very similar to what we were looking at with Euro, very similar to what we're looking at with Sterling. Could see some kickback. Ultimately, I still think, obviously look for 1265, 1246 on that top side clip for stronger resistance. Here's what it looks like on the intraday chart. And here's what it looked like last night. Okay, there's your daily, no change there. Boom. Okay, so there's 112.43, 112.45. Boom, we tagged right into that region. Lower end of that region was literally perfect resistance. Divergence in near-term momentum, price action with a higher high, a series of lower highs. Basic trigger break from earlier in the week. Just wanted to see if this holds as resistance, and it did. Okay, and it did. So all things held constant, if you're going to take anything short, the ideal play would be sort of US markets open, this thing drips into here, fails so we can get some sort of short against 1265 on the near term to play the pullback. If you're a little bit more liberal on this would be the short right now against the high. But you have to get through weekly open support 112 would be the first area to get through. And then 111.88, 111.65, I'd look to wrap up the rest of it if we get down there. But weekly opening range, in my humble opinion, for me on this pair now looks like this. Okay, the weekly opening range is taking shape just below resistance, guys. Those are typically great plays. So even if we're wrong on this one and dollar yen blast through 112.65, it's gonna shoot. It's gonna shoot. So you're gonna look for 113.27 if that happens, and it's not gonna be a slow grinder because of the nature of this area. So when we find these confluence regions, when the weekly opening range or a monthly opening range takes shape just below, gives you further validation, further conviction when you do see the break on playing it a little bit more aggressively. So all things held constant, I'm looking for failure ahead into 112.45, 112.65 is where I'd be looking for possible short entries here. Okay, so we'll be tracking this one into the US Open. Very interesting. Listening and seeing your work is like taking medicine for a trader. Thank you, Ty. I appreciate that, man. Yeah, I just hope I'm able to take advantage of these. I'm limited to being in front of the computer for no more than 25 to 30 minutes at a time. Obviously, for this webinar, we're bending the rules a little bit, but I hope to get into some of these positions, guys, and get my feet back into the market relatively soon here. So that's dollar yen, and I'm sticking to it. The abomination, interestingly enough, is on the menu. So what do you guys want to talk about first, dollar Swiss or SPX? It's kind of the two that I had on the list for today. Swissy says, Marco, first call, you get it. Euro yen Thai, I haven't looked at. If we have time, we'll take a circle back. But Marco wants to take a look at Swissy. So dollar Swiss, the SNB is on tap tomorrow. Whatever they're expected to hold, there's not expected to be any change. But here's the reason I think SNB. I probably should have just posted this last night, but I'm a little timid still on getting too aggressive on trying to fight these trades. Nice area of support, man. Nice area of support. If you had to put a gun to my head yesterday, that would have been the trade on the Swiss. He was to the long side because just a basic where we are in trend. Here's the daily chart, and hell, here's the Swissy weekly chart. All right, it's a basic trend line we've been watching since 2011. Boom, boom, again 2012. We did break below, but you saw on a weekly standpoint, very clear pivot. The break saw acceleration, resistance. Okay, look at this on a closed basis to make things clear. Resistance, turned lower, support, that perfect pivot there, broke through, and once we broke through, there we are with acceleration again. So that same trend line is basically what we tested yesterday. Whoops, ugh. There we go. Okay, so really clean stuff. If we're gonna get a turn, this is what you'd want to see. Now, near-term resistance, and again, this is sort of longer term, guys, weekly chart. Near-term resistance is basically here, but the more important level is right here. You have the confluence of the 52-week and 200 long week moving averages. Those coincide right with the monthly opening range highs, around 97.58, 97.60. So that's sort of your major resistance level. A breach through that would suggest a bigger play is at hand to the upside. Not the way I want to play it. Ultimately, I do think this moves lower longer term, but on the near term front, I think the risk is for a little bit of a pull higher. That's the weekly chart. Okay, that's the weekly chart. Here's the daily chart. Basic near term downtrend support, 50% or 50 line was perfect support into the close of August. There's the 17th to the start of the week. There's yesterday, and here's the move higher. The trade again here, we just talked about the weekly chart. Whoops. We just talked about the weekly chart coming into near-term resistance. Here's the daily chart, now again at near-term resistance. What is that level? Monthly open, 96.95. And again, the median line for the current operative slope we've been following off the yearly highs. So if we're gonna get a pullback, this would be the first area to look. The long trade or the long position that would have favored last night, this is where we would have taken off the rest of that trade. The next big upside why does that keep happening? The next big upside resistance level, guys, for me is up here at 97.30, 97.44. It's the yearly open, 38.2 of the yearly range, and the 200-day moving average. Okay, add to that same parallel slope for the down pitchfork there. Support, 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 break, acceleration, resistance, resistance again. Okay, so real clean. It was a kind of an obvious trade. I didn't know it was gonna move that fast, but even on this decline for the weekly charts or for the daily charts, guys, this is very strong divergence. Price action with a lower low, the oscillator, or the price action with another lower low, the oscillator with a series of higher lows. So again, near-term risk for a recovery. This is your first pivot. This is the major level of resistance. Also turns out to be not too far from what? Your objective monthly opening range highs. Again, that stretch is much higher, but on a closed basis even, you're not going much higher than 94, 97.50, 97.49. So you get the picture. Here's what the intraday chart looks like, or let me go back to the 240 here. And again, very clean picture of the same pitchfork, same slope. There's the 50 line, perfect touch, right? Here's the breach, first area of resistance, second area of resistance. This is sort of your big region. Let me adjust that 200-day moving average, which is now here. Okay, 97.25, 97.44. Okay, what should we look for as near-term support on a trade like this if we are going to get a decent pullback? Well, I guess sort of your ideal pullback for an entry or a reattempt at an entry would be something like this. Okay, towards this region, try to break back towards 97.25. Obviously, the first area I would look would be weekly open support. That's basically 96.73. So, look for exhaustion at one of these two levels. Now, you might be thinking to yourself, well, Mike, doesn't this look like an objective break of the weekly opening range? And it does. My problem is that you didn't really get a test of the weekly opening range high, right? If this is the weekly opening range high, you stretch into a weekly opening range low, cool. What would have validated this would have been if we failed here for a little bit, pulled back, and then broke. Then you can say, okay, we made an objective weekly opening range high. But it is Wednesday. I mean, this could be the weekly opening range high if we pull back from here. So that fuels our upside bias, but certainly wouldn't give me justification for just trying to get long from that level. You have to still pick and choose your entries. Ideally, a scalp against this low would be how I would play this one. But just watch these two regions of resistance. These are two big levels for dollar Swiss. Okay. Questions, comments, concerns on Swissy. Peter says, hey, Mike, keep the webinar short. Don't hurt yourself, mate. You have to take care. I appreciate that, Pete. Yeah, we'll wrap it up in a couple of seconds here. So that is Swissy. Watch for the S&B overnight. That's number 5. Real quick on the SPX. Here's the SPX, guys. Here's the daily chart. I mean, literally, I haven't changed anything. Here's what it looks like. So the only thing I did was add a level to the high that we made last month, or back in August. That is last month. So it's still pretty clean. I mean, the 50 line here was, we turned just pips ahead of it. So sue me, you know what I mean? And here's just that same former swing highs for the year on that same 50 line again. And this pitchfork, which we broke above, tested as support, also converges on that same region. So for me, it's all about 28.76, 29.15, the highs that we made. Look for a break of this region. Ultimately, again, on the top side break, you're going to have to make some near-term measured moves here, but there's really a lot of room if we break through this. So the monthly opening range, in my opinion, here is very well defined. And this is sort of the immediate range threshold that you need to see break for validation on SPX. Okay, that's number 6. Gold, number 7. Here's what the gold trade looks like. You have to be cognizant of where we are. It's very clear, in my humble opinion, again, that we have a very well-defined September opening range. Okay, opening range low, you set a high, you test a high, you get even higher, fails again. Monthly opening range is pretty well set below our resistance that we've been talking about for weeks, which is 12.15, 12.14. 12.15 specifically those former swing lows. It's also the low day close for back here in July. Nice pivot in price, converges on the upslope resistance. I get the 50 would probably be the better level to watch here. Oh, I leave the 38. Okay, yeah, just watch that then. 111.87. Pretty well-defined range here in gold. Again, seasonalities do favor the upside, generally speaking, in gold, euro, downside, and dollar. The monthly ATR is at screaming lows. Is screaming low? Is that what you're saying, Ty? So the consolidation and price movement, absolutely. It's been a pretty tight since the start of the year. I'd say this is probably the tightest ATR that we've gotten. Absolutely. And this month has been pitiful. I'm not so sad to see that I missed all this, but the levels are still pretty well defined. So 112.14, 112.15, still your upside resistance, followed by that upper parallel, 11.87, 11.80. I don't want to stack up the levels too much, but this is also the low day close and the 786 retracement. Median line is right there. So unfortunately, that's what would be needed to sort of make us bearish again. I'm still in favor of buying weakness in gold, looking for that topside break above 12.15. Okay, last but not least, that was 7. Really quick on Aussie. I just want to touch on it because I know that Jamie's looking at that as well. But man, the level of which that we came off of is pretty radical. Okay, this is basic slope, guys. This is the weekly chart for Aussie of the near-term descent off of the yearly highs that we made. Basics a parallel off the low that we made in May. Literally caught the lows here, and here's the recovery. Momentum coming back from oversold conditions. Weekly close basis is going to do it. Here's on the daily. Looks like a breach today, an attempted breach of the objective monthly opening range. So basically what that would entail, guys, is if we do get a close above, the low day close from last month was 72.38. If we get a close above that, which is just above the monthly opening range highs, it would suggest further upside. Now, how do you play that from here? You can't. You got to look for the pullback. Here's even a trigger break in momentum, right? High in price, resistance, 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 resistance. Today's close would validate a near-term trigger break to the upside. So I think Aussie has a little bit more legs to go. Again, it's kind of hard to get too aggressive on this because of the dollar index, what we looked at there. Don't want to take a carte blanche opinion, but just to put things in perspective. Here's what you look like. I mean, if you're holding longs, ideally 72.89 would be your target on whatever's left on that trade. Also an area of interest where you could see a little bit more of a pullback type of play. I think Jamie's right in the way he's looking to approach it, is which you have to look for the pullback to get long. There's no trade here to chase this on the long side. Just know, guys, this could stretch still into 72.88, 72.89 before turning lower. Ultimately, for me, if we were to get a break back towards 71.70 would be a decent area, is what Jamie's looking at. I'm looking just ahead of that, even this basic slope. So basic where we are in time. You had that reversal, 4-hour reversal candle last week off the highs. It gets you just below the 2017 open. Sort of a range right here, just below 72. I start to look to fade if we get a drop towards that. Near-term resistance, 72.88. The big level to be in the upside is 73.32, 73.27. Ty, you remember that level? No, me and you talked about it for months. That still would be the entry. Dagon, 71.90 entry. So if we get to 71.90, in my opinion, Dagon, I'd be looking for exhaustion there. Yeah. I mean, Jamie wants 71.70. That would be ideal scenario. But from a near-term standpoint, I want to kind of see how we react along that median line. Or if we get down towards there, you have to work with this slope, right? So if it comes ahead of that 71.70 level, I don't want to miss a trade. But the way I would look to trade this, guys, and just to put things in perspective, when we look for how to execute on a trade like that, if we take this to an hourly chart, once I get more conviction on a reversal, okay, you're already starting to see divergence here, but let's say this breaks lower, then you just tack on a quick retracement. Nope, not an extension. Like this, okay? And you see where the retracement will line up with basic slope. And the reason, again, I said I was, why do these copy in like pairs now? I was on board with Jamie's because of this. It's a 38.2 of this high. Now, I can't make any assumptions that that is the high. There's nothing here confirming that. There's no trigger break. Divergence can last for hours before we move. So yeah, I can't use that level yet. Once we get into another high or we turn lower, tack on that retracement, see where it converges. That would be my favorite entry for possible long. Make sense, Dagon? All right, that is number 8. Okay, that's everything on my list. Perfect. Dagon says, perfect, thanks. Ty says, go lay down, LOL, I am serious. I will follow the doctor's orders, okay? So we're going to wrap it up there. Again, guys, it's great to be back with you. I'm going to keep the updates, again, light just into the close this week until we get, I have another update on Friday with some scan results. So we will taking this day by day, but I do want to, again, just offer my serious thanks to all of you. It's your words of encouragement and support has been a really humbling experience. So thanks again. Ty says, look at Euro Yen for Friday. We'll look at Euro Yen tomorrow. Guys, I will try another webinar tomorrow. Things to look okay. So, um, we'll talk about some more into the close of the week. But Euro Yen, I would just be cautious for possible near-term failure. And if the dollar yen trade does materialize for the pullback, that yen strength might be a nice little pullback here in Euro Yen as well. Nothing too compelling here, in my opinion, Ty, right now. But yeah, it could be a decent near-term pullback before resumption. Looks like a decent wave count to the upside, actually. So I'd want to use the pullback as corrective. Okay, Iman says, take care of yourself, Michael. Your health is important. Thanks a lot. Dagan, good luck. Thoughts are with you. Cheers. Thank you all. I will see you tomorrow morning. I'll try to have an update for you later today. Best of luck trading, guys. Cheers.